not at the
All
same
right.
time.
No.
So, how many of you guys have a banking account? Is it a checking or savings? Savings mostly? All right. Or both? Even better, right? All right. So, why do you guys have the account? What's the advantage of it?
Keep track of our money that we put into the bank, and we don't have to carry cash around.
It helps us keep track of our money, right? Because we're able to see it online and all of that. But then also, we don't have to keep cash. I know if I have cash, I spend it, right? I do. So it kind of keeps us safe, right? What else? Interest. They actually pay us money to keep our money in there, right? Because what do they do with that money? Exactly. So they're going to take that money that you put into the bank, and they're going to use that money to lend it to somebody else, and they're going to charge them interest, right? So they're going to charge them more money and give you a smaller amount of money for being able to use your money. So we talked about the money is safe. It's not only safe from us, but it's also safe from others. If we put our money in the bank, we know for sure we're going to get that money back, right? We're pretty sure, right?
Yeah.
We know for sure. And do you know why we know for sure? There's actually insurance for this. So we talked about insurance last week. So bank accounts, if you put your money into a checking and savings account in that bank, your money is insured, and right now it's up to $250,000 that you put in there. You are guaranteed to get that back. Now, did you guys hear about the issues that happened last year with like IndyMac and Chase, or WAMU, I guess? Did you hear about that? So people actually, and this is how the insurance came to place, it's called FDIC. Back in the Depression, people got a little bit worried about the banks because when we put that money in, they go and lend it out, right? So they don't have everybody's money at one time. And so everybody kind of got a little bit worried about these banks and, hey, are they going to have my money? So they did a bank run. And everybody ran to the bank to try to get their money out because they were worried they weren't going to get their money. So this is where FDIC insurance came into play to say, hey, we're going to guarantee that up to $250,000, no matter what, you get it back. Well, that's been into play for a long, long time. But last year, people were still worried about these banks having enough money, so they were still running to the bank and taking all this money out. Because do we really want to make an insurance claim to get our money? Probably not. So people were still worried and still went and got their money out, causing like WAMU to have to get bought out. IndyMac also had issues. And it just saves us money to have the bank accounts as opposed to having to go and write money orders all the time or getting cashier's checks. Those end up costing a lot of money. Or if you have to go to those check cashing stores, have you guys ever done that? They charge you like $5